Ladies and gentlemen, I welcome you all to the Q4 and FY25 post-earnings conference call of Kilburn Engineering Limited. Today on the call from the management team we have with us Mr. Ranjit Lala, Managing Director, Mr. Amritanshu Khaitan, Director, Mr. Sachin Vijayakar, Chief Financial Officer. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements, which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to detail us about the business and performance highlights for the period ended 31st March 2025, the growth plan and vision for the coming year, post which we will open the floor for Q&A. Over to the management team.
Thank you, Vinay. Good afternoon, everybody. We welcome you all to the Q4 2025 and the year-end 25 earnings call, wherein we will apprise you of the latest update on the company and its subsidiaries. It was another successful year for Kilburn Engineering, driven by sustained demand, strategic acquisition, and capacity expansion at our Ambernath factory and ME Energy, Pune. We completed the acquisition of Monga Strayfield on 27th Jan 2025. Also, the Ambernath factory is now fully operational. Furthermore, it's been a year since ME Energy was acquired. The phase 1 expansion, which was completed in the middle of the year, is also fully operational. As mentioned earlier, the sustained demand has led to highest ever order intake for Kilburn at 493 crores. Also, ME Energy achieved order of rupees 83 crores. Monga Strayfield, our recent acquisition, has also had a good order intake. As a group, we have closed the year with an order backlog of rupees 483 crores. We will now give a brief of the financials already available in the public domain. Kilburn had a top line of 335 crores for the financial year and 102 for the quarter, both being the highest in respective time periods. We also achieved the highest ever EBITDA margins. On a consolidated basis, we achieved a top line of 425 crores with EBITDA of 100 crores. For the current financial year, we have an excellent inquiry pipeline of 3,000 plus crores at a consolidated level, and we hope to have a conversion rate of 20 to 25%. This would ensure sufficient backlog through the year to achieve 50% growth, which also includes full year revenue of Monga Strayfield. Going forward, we expect a CAGR of 25% to follow in the following years. With this, I would like to hand it back to Vinay.
Thank you, sir. All those who wish to ask a question may use the option of raise hand. In case you are unable to do that, just drop a message on chat and we'll invite you to answer the question. We'll take the first question from Agastya. Agastya, you can go ahead.
Thank you, Vinay. Am I clearly audible?
Yeah.
Hello, sir. I don't know whether I should congratulate or not, because on the revenue side it was slightly light, but the margins are honestly mind-boggling. So what exactly led to such high margin levels, sir, when the revenue was slightly on the lighter side? Also, the reason for the revenue to be on the lighter side, I am pretty sure, Vinay Bhai and I had a discussion, and we reached the same conclusion that it has something to do with the expansions which are going on, so disruptions at your plant level. But what exactly was the reason for the lighter margin, the lighter revenue and the heavy duty margins?
Yeah, so on the revenue front, we still had a couple of projects, which have, we were not able to complete them, and we had to, take them to the next quarter, that is the current
Okay.
quarter. So that was one primary reason, or a major reason, I should say. There were two such projects. On the margin front, if you recall, we had a project from JESA for OCP for Morocco. So
Right, sir.
that execution has commenced, and that was a project with higher margins. So this was one of the contributing factors.
So that project, while it is still under execution, will the margins continue to be like this, or this was just a bump up at the initialization phase, and then we will taper down to the mean revert back to the original margins?
See, Agastya, we have always mentioned that we will be able to maintain margins on 20 plus basis.
Okay.
A little more specific between 20 and 22. This is what we expect. Now, there
Mm-hmm.
could be some quarters like when it jumps up, it goes down slightly. I think last quarter it was around 23. So this
Right, sir.
keeps happening. This keeps
Uh,
happening.
Agastya, this margin which Ranjit is guiding for is at a consolidated basis. So,
Yes,
you know,
yes, understood.
one thing which is very clear is that you have to look at Kilburn engineering in a consolidated form, because
Right,
it's going to be work which ME Energy does for Kilburn, Kilburn does for ME. There will be a lot of movement around in order flows, execution. We will try to leverage the strengths of all the organizations put together to
right.
deliver consolidated performance.
Hmm.
So when we are guiding for between 20 to 22%, that is the range we are guiding at a consolidated level.
Understood.
There's still one order which is on hold,
Mm-hmm.
where we had a large order from Granules which had come.
Right.
There we are still working with them on their pilot part of the order, which
Mm-hmm.
hopefully in the next 3-4 months should get completed. Then
Hmm.
that order will go into commercial production. So that's a 70 odd crore order, which
Hmm.
we had hoped by the third, fourth quarter of last year it will get into execution. That
Right.
also has been on hold. So those are the reasons why there has been a postponement in execution
Right.
for certain jobs. But we are very happy that we've been able to make up on the EBITDA front through other profitable orders. So the product mix has been better.
Yeah, the margins are like really, really nice, really, really nice. So one final question: you mentioned that the order pipeline and inquiries are at 3,000 crores plus now. Last quarter, if I remember correctly, you were saying 2,000 crores. Now,
Right.
is it because of like consolidation, or is it just an increase and expansion in the inquiry flow?
Well, if you recall, last year it was 2000 plus for both ME Energy and Kilburn put together. Okay.
Hmm.
And now we also have Munga Strayfield. So between the three of us at consolidated level, we have 3,000 crores plus. So we are
Hmm.
getting more inquiries than before, that's for sure. Yeah.
Hmm.
And in the past, probably the inquiries that we are looking at were also, if you look at the value, they would have been 100 crores or 60 crores, 80 crores. Now we are looking at bigger inquiries. So that's how the whole pipeline has grown.
Understood, sir. So thank you very much for giving me the opportunity. All the best, sir. The numbers are actually pretty decent, sir. Pretty decent. If it's a spillover effect, we'll see it in the next quarter. My congratulations, sir. Thank you very much, sir. All the best.
Next 2 quarters. Yeah. Thank you, Agastya.
Thank you.
Thanks, Agastya. We'll take the next question from Shagar Shah. Shagar, you can unmute and go ahead, please.
Good evening, sir. And first of all, congratulations to the entire team of Kilburn Engineering for posting such healthy operating performance, actually. Now, my first question was related to actually ME Energy. ME Energy in this year, we posted around 77 crores of revenue. And as far as I remember, last year you said that ME Energy, due to its working capital constraints, wasn't able to take larger orders. We was just confined to small boilers and those sort of products. So, in this particular year also, we didn't see some material growth from ME Energy, and that is why Kilburn Engineering on a consolidated basis actually missed our estimates. So, first of all, can you say about ME Energy that what means, is there some execution lag or maybe some longer gestation period so that we'll maybe see some good growth in FY26 or whatever color that you want to at least spread on ME Energy, sir?
Ranjit, if I can take this point, I think, as I mentioned earlier, you need to now look at Kilburn Engineering in a consolidated basis. The figure which you're talking about, ME Energy, uh, that is net of certain turnover which is coming in the standalone numbers as well. They get net off because their orders, some orders which Kilburn has got, but ME has executed it. So actual execution of ME Energy is close to 95 crores, but it gets net off because it's a subsidiary of Kilburn. So you have to look at Kilburn as a whole achieving 425 crores. Our opening order book is 480 crores. We strongly believe we will deliver a 50% CAGR growth this year on the basis of this consolidated opening order. And then the year after, we are looking at a 25 to 30% growth, because again, you'll have the Monga Strayfield acquisition full impact coming into this year. So unfortunately, because you've had both the acquisitions happening in the month of February in both consecutive years, the quarter four numbers are not at all comparable to each other. So you have to look at the consolidated yearly performance. If you add Monga Strayfield also, actually the year of Monga Strayfield has been close to 80 crores, but only 12 crores is being reflected in the balance sheet. So when you look at where we are today and the money we have spent to acquire Monga Strayfield, the company is already at a 500 crore top line level with a higher EBITDA. But that EBITDA and top line has got lost because that's how accounting happens.
Yeah, because of the intercompany transactions that you are referring to.
And also
But
because the acquisition had happened in the month of February. So the whole year's turnover last year of Monga of ME did not come in, and this year of Monga has not come in.
okay,
So
but
we are
at
looking
least for
at a 50% CAGR growth for this coming year, the year we are in now, FY26, on the base of 425 crores. And we are looking at 25 to 30% growth in the following year.
sure, sir. So my question was, at least for FY26, since ME Energy is penetrating into cement, and some it is now it has capable to take some even larger orders actually, as has 100 crores also. Obviously, the period that will take to build these products will be longer time. But at least on a ME Energy on a standalone level, and especially when the phase two capex also will be over, if I assume by at least by H2 H1 FY26. So at least can we expect at least a decent 50% growth from ME Energy on a
So,
standalone level? I'm saying.
so again, I would like to highlight that this year we have grown by 30%. If you look at ME Energy standalone, we believe we should continue to grow at between 20 to 30% for the standalone business. But again, my only request to the investor community is don't look at ME Energy as a separate company. Look at it as a separate manufacturing facility, because there will be a lot of work of Kilburn also, which will get offloaded into the expanded plant of ME Energy in Pune. So ME Energy will be making air preheaters, paddle dryers, maybe some tea dryers as well, because we will leverage our strengths as a group to deliver the best products at the best prices to our customers. So it is not appropriate to look at ME Energy as a separate going concern, but as part of the consolidated Kilburn group. The question you had on cement industry, it's early days. We have got one order which we are executing, and we are going to work with. We are approaching various cement companies to, get into that sector. So hopefully, in the next 2 to 5 years period, or 3 to 5 years, you should see ME Energy scale up the play in cement to a much more substantial number. But these things take time. It's not going to happen overnight.
Okay, sure, sir. My next question was related to Monga Strayfield as well as our Ambernath acquisition. Now with Ambernath acquisition, our capability actually to build products is also increased. Recently, you took a large order for around 4 rotary dryers also. So basically, at least from Ambernath and from Monga, can we expect optimum utilization since you have a large order book of nearly around 435 crores closing order book I'm speaking. So that is one thing. And the second one, can you throw some light on the order inflow that I know 3,000 crore worth of inquiries, but obviously to convert those inquiries into revenue, you must have got some clarity that how is the demand, at least from certain sectors on ground. So can you throw some light related to order inflow also?
On the order inflow front, as I said, we would have a conversion of around 20 to 25%. So if we're having a 3,000 crore pipeline, so you can expect 6 to 700 crores of order intake. Okay. On the Amarnath factory, as I said, it is fully operational. So I would say that whatever we had targeted 100 crore of, addition into the turnover, that should happen in the current year. Yeah, so that will definitely again contribute to the top line, but that is anyway an asset of Kilburn. It's not an acquired company; it's a unit of Kilburn. So both these are well on track. On the ME energy front, you mentioned that the phase two expansion should get completed by H2, by H1N. No, it will be somewhere around, I think, middle of H2. This is what I can guess as of now, and on that we'll keep you updated. On the Monga Field, you had a question on what could be the top line contribution.
Yes, and how are things panning out now?
Yeah.
Because you were quite a bit on the industrial trials front because of opening of FMCG and other sectors due to this acquisition. So, how is this panning out for you when you talk to the customers of maybe of Monga Field, and how are the synergies can be built in this particular year
Right.
and
So
obviously
Monga
going ahead?
Field is into RF dryers, which is a very, very niche market. And I think we are well placed with the customers, and we are looking at some exhibitions and some trials for new applications, which is very much on track. Now, how much top line do we expect from them? Well, I would say that anything between 90 to 110 crores is what we are looking at. Yeah. But as we go forward, we'll be more clear about the numbers. But again, as I said, we don't want to look at each of these companies by themselves. We are targeting consolidated top line.
Okay. And my sir, just last couple of questions on data keeping. First of all, can you highlight that are we something like going ahead? How are we going to utilize the money actually? Because in this particular year, around you'll be getting around 200 crores from the issuance of this from the issuance of your shares that you have done before to public
Mhm.
shareholders. So
Mhm.
around 200 crores of money that you'll be receiving this year. So any plans that you have built for some new acquisitions or that is one thing. Another data keeping question that I wanted to confirm, the new equity share capital post the dilution of this year will be around 52.6 crores, right?
Yeah, correct.
Okay. So can you throw some lights on that? How are you planning to utilize this money? Or still the plan is not really made?
No, no, the plan was very much made. In fact, there was a plan. That's the reason why a certain amount was raised. The breakup, I would request Sachin to give it to you.
We had already taken a shareholder approval where the utilization was mentioned. Part of it will go towards capex, part will be going towards repayment of our term loan, part of that will be towards investment into our subsidiaries. And balance we will decide is for working capital as well as some general corporate use. So as and when opportunities come, that will be accordingly utilized. And not to be in the by this year end because we have got 18 months. So something of that may spill over to the next year also.
Okay, okay. Fine, sir. And this last thing on the gross margins, I know you have guided that you are aiming for 20 plus percent plus EBITDA, and this is a project business. Every contract has a different numerical values attached to it. But on the gross margin front, I wanted to stress on that this quarter was a phenomenal quarter for at least for the gross margins perspective. So overall, the gross margins, even if the metal prices go high, so our gross margins will relatively stay stable at around in the last a few years that we have got
Sagar,
that around 40
Sagar,
and
regarding
50%.
gross margin, we don't want to give any detailed explanation because sometimes what happens is, certain costs come into material, some subcontracting work happens. It's basically differing to different jobs. So we
Correct.
restrict ourselves to guiding for EBITDA.
Okay, sure, sir. No problem. Thank you so much, sir, for your answering my questions, and all the best, sir.
Thank you.
Thank you, Sagar.
Thank you.
Thank you, Sagar. We'll take the next question from the line of Atharva Shilidhar. Atharva, you can unmute and go ahead, please.
Sir, am I audible?
Yeah, you are audible, Atharva.
Actually, I want to ask, on a consolidated basis, our revenue and profit growth is very good, but sir, our CFO is not good for many years. So currently, on a consolidated basis, CFO is negative 10 crore. So sir, can you explain, sir?
Can you come again?
Atharva, you are
He's
not
asking
audible.
for about cash flow from operations.
Okay.
Why is it?
Sachin,
Sir,
can you
our
take that?
actually cash flow is negative 10 crore this year, but our revenue and profit growth is very good. So sir, I want to understand what is the problem, sir? Why cash flow conversion is not happening?
Atharva,
Hi.
am I audible?
Yeah, you're audible,
Yes.
Sachin. Go ahead.
Atharva, if you see our with the long delivery of our projects, the time cycle taken, there is a buildup of debtors as well as our unbilled revenue, the contract assets. In the last month itself of March, we have dispatched around 30 to 40 crores of billing has been done. So that has led to an increase in our debtors also. And even though the cash flow is from operations is negative, we have put in funds for the buildup of this inventory through this share issue as well as certain ICDs which we have taken from our subsidiary companies. So it has been, that is why.
I would like to add, you see, one reason why you will see that the standalone balance sheet has a term loan which has come in short-term term loan. It is actually from Mongas Sheffield only. So in your cash flow statement, there's a variance because the company paid extra to Mungas Sheffield shareholders because they were sitting on 30 crores of cash balance. So once the acquisition was completed, we've taken that as an ICD back in our books and ME Energy's books.
Okay. Sir, I have another question. So, sir, can you give guidance for the CFO to PAT conversion for the next year, sir? We just want to know how do you see CFO to PAT conversion, sir, for the going forward?
Sales to PAT.
No, sir. CFO to PAT.
Cash flow from operations to PAT.
Means conversion, sir, on percentage basis. How do you see, sir, going forward? For example, if PAT is 100 crore and cash flow is 40 crore, means 40% conversion. So, sir, how do you see going forward, sir? That's what
I think this is a little difficult to predict because, depends on the kind of order booking we get this year, the kind of growth the company is doing. But I can only tell you that we are adequately capitalized and cash flow will not be a concern because there will be free cash flows generated and also there will be equity money which will come in for working capital as well. But it's very difficult to predict what you are saying because it also depends on what order booking we will do and then how much of that goes into execution.
Also, the conversion will help on cash flows.
Okay, sir. Thank you.
Thanks, Atharva.
Yeah, we'll move to the next participant.
We'll take the next question from Mr. Karthik Bhatt. Karthik, you can unmute and go ahead, please.
Yeah, I hope I'm audible. Thanks for the opportunity. My question is on the capacity, sir. I think in an earlier call also you had mentioned that the Ambernath unit is likely to be at about 100% or so by June, and the Sarauli unit is likely to be at around 70 to 80%. And ME phase 1, I think, is also again at 100%. So how do we, how are we placed with respect to capacity for FY26? I mean, do we feel the need for maybe expanding capacity to meet the demand for FY27?
Well, as far as Ambernath is concerned, yes, it is now at 100%, fully operational. ME is also 100%, and we said that we look at phase 2 expansion for ME, right? So that should add to capacity. And we had also mentioned that we are looking at a brownfield expansion at Saravali, but that we will do at the right time. It is very much on the plans, and as it really takes shape, we will keep you posted. Yeah. And I'm sure it will be very clear by end of Q1.
Okay, sure, sir. And just one clarification, I think the other expenses, if we were to look at, there's been a reasonable jump YOY to about 23 crore or so. What factors led to this increase, sir,
Which
at
one?
a console level?
We've had certain jobs where there's a lot of freight involved. I think that goes into other expenses. Sachin can confirm.
Yeah, correct.
But that is all factored in the margin. Some export jobs were there where there was high freight.
Okay, sure. And sir, I think it was good to see if I were to look at the order book composition, nuclear comprises about 45 to 50% of the new order inflow in Q4. So something which wasn't there in the past, which is really heartening to see. So do we have more inquiries in the pipeline in FY26 as well? And can we see expect a decent order inflow from nuclear for this year also?
Yeah. So in our previous calls, we had mentioned that we are looking at the nuclear power also contributing in the coming quarter. So we did convert one into an order. This was from L&T because L&T is the EPC contractor for that particular job. There is one more project on which we are working, which is probably of the same value. So as of now, one more project is visible.
Okay, sure.
And as and when we go forward and we have more
Okay,
opportunities,
sure.
we will keep you updated.
Sure. Okay. Sir, this 650 to 700 crore, which you had revenue guidance, which you had mentioned, I think in an earlier call, seems comfortable now for FY26.
Yeah, I think we are comfortable on that because
Yeah.
now the capacities are also have been added, and well, there's always a slippage, as I said, by a quarter, which I hope will be taken care of for one of the projects. I don't see a challenge.
And sir, is it fair to say that so this higher growth trajectory in FY26 is mainly being driven by the OCP Morocco order as well as this granules project that you mentioned? And thereafter in FY27, while we are guiding for about 20-25% as of now, if we were to receive a similar higher value order, I mean, maybe as and when we may revise the guidance as well during the course of the next year. Is that a fair assumption?
Mr. Khaitan, you're muted. I think Mr. Khaitan wants to speak.
When we are looking at 25-30% growth in FY27, that is based on the current inquiry pipeline which is there. So if we are able to convert 20-25% of the current inquiry pipeline, then automatically the following year the growth numbers should be achievable.
Okay, sure. Thank you so much. Yeah, thank you so much.
Thanks, Karthik. We'll take the next question from Bharat Gupta. Bharat, you can unmute and ask your query, please.
Sure. Thanks for taking my question, sir. A couple of questions. So first, when we look at the customer deferment which has happened, so can you specify the quantum of revenues which have got spilled over to Q1?
Sachin, can you take that?
Nearly 50 to 60 crores of revenues.
Right. And we'll be able to see it in Q1, right? Or it is
No,
also
It will
spilled
be
over to
quarter
Q2.
two.
Q1,
Yeah.
Q2 both.
Yeah.
Okay. And I think we were looking out some sort of a inorganic acquisition. So, and that too overseas. So, what's the progress in regard to it? Like, it's still under discussion, or like we want to grow organically first?
Well, right now we would like to focus on our current subsidiaries and Kilburn. Yeah. But if we find something interesting, we will not hesitate to go ahead. But as of now, we are very keen on streamlining what we have.
Right. And so, just a bookkeeping question, like in regard to 650 or 700 crores revenues, which we are projecting for this fiscal year. So that includes the Granules India contribution, or that particular part is currently on hold?
No, well, it does include Granules India, but then we have sufficient backup. So we have enough orders, and I'm sure some more orders will be coming in this quarter. So overall, I don't see a challenge.
And on console level, we are guiding for 20 to 22% kind of margins.
Right.
Okay, that's it from my side. Thanks.
Thank you.
Thank you, Bharat. We'll take the next question from the line of Prem Soni. Prem, you can unmute and go ahead, please.
So thank you for the opportunity and congratulations, sir, for the good sets of number. So, sir, my question is on the order book side. Like in the PPT, we have mentioned that order book inquiries around 3,000 crore. So, can you help
Inquiry.
with the
Sorry,
bifurcation?
that is inquiry pipeline.
Yeah.
3,000 crores.
Yeah. This is the order inquiry of around 3,000 crore, right?
Right.
So, about 20% or 25% is the conversion rate. So, I believe 600 to 700 is the order book size can we expect.
That's our expectations as on date.
So, can you help us with the bifurcation in terms of the subsidiary, like for Monga Stay and ME Energy?
Yeah, so I can say that if it's around 600, 400 from Kilburn and 100 from Monga and ME Energy. I'm just giving you a broad number.
Okay. And sir, additionally, if the order book that we are anticipating from 400 crore from the Kilburn and 100 crore from the subsidiaries, so like in the subsidiary, in which sector we are anticipating from higher order from upcoming times?
Let's talk about Monga Strayfield. So in the past, they have had major contribution from the textile vertical and then from the food, yeah, and then others. So we are expecting the food and we are expecting the non-textile business to grow much faster in this year. Okay, that's one. On the ME front, it is a combination of various verticals. Definitely, our focus is on cement, but I also see the petrochemical, oil and gas, vertical contributing to ME energy also. And for as far as Kilburn is concerned, it's a mixed bag. We have inquiries from the nuclear, we have inquiries from the fertilizer, we are expecting some inquiries from petrochemicals, carbon black, soda ash, maybe not. That depends on how the market moves. So it's a mixed bag.
Okay. And sir, by when it can be executed, like if we are tentative timeline?
Well, any orders that comes in Q1 and Q2, normally the Q1 orders would get executed by the end of the year, and Q2 partially it could get executed. I mean, because our turnaround times are between 7 to 11 months, sometimes 12 months.
Okay. And so are we exporting these order to the overseas, like?
Yes. In fact, we have a good export order book. The exact number maybe Sachin can inform, but we have very good order book on the export front also.
So can we have just quantum numbers, like in terms of percentage?
Sachin, can you give this number if you have it ready? Sachin, you're muted, I guess.
Out of the order backlog, nearly 160 crores are export orders.
160 crores.
Yeah, rough cut on export orders.
Okay.
You can see it has grown over years.
Okay, sir. And sir, how we are confident on the 20 to 25% of growth in the next FY26 and FY27? Like, if you can give us a shed on light on that part.
Well, the existing numbers make us feel confident. The open order book that we have, the inquiry pipeline that we have, the kind of goodwill that we enjoy with the customers, the references that we have created both in the domestic and the international market, they are the, I would say these are the pointers towards our confidence levels.
Okay. And so can we assume the EBITDA margins will be remain same as per the FY25? Like,
They will remain 20 plus at consolidated level. If you want a more specific range, I will say between 20 and 22%.
okay, fair enough. Okay, sir. Thank you. And thank you. Congratulations for again.
Thank you, Prem.
Thank you, Prem. I would like to invite Aman Baheti, analyst from InCred Capital, from the chat line to ask his queries.
Can
Hi,
you
Mr. Aman.
read out the question from the chat?
So he's not posted a question. You want to
Yeah, he has
ask the query.
There's the question from Ankur Tripathi. What top line contribution is expected from Monga Strayfield acquisition in the next and subsequent financial years? Well, Monga Strayfield contribution in terms of top line, we are targeting 100 crores plus. This is the first year, and then we are looking at what are the opportunities. But I would expect around 100 crores. I mentioned it's between 90 and 100, 90 and 110. As discussed in the last con call, the projected top line was 700 crores. Considering the recent acquisitions of Monga Strayfield, I'm just reading out the question. Is there an upward revision? No. Well, let me tell you that we have just mentioned we expect a 50% growth from the current year's top line. I'll stick to those figures. So whatever that works out, 675, 700, yeah.
So we'll take the next question from Samir Palod. Samir, you can go ahead.
Yes, hi. Am I audible?
Yes, Samir, go ahead.
Yeah, hi, sir. Thank you for the opportunity. A good set of numbers. Just one question regarding the guidance. If there is a 50% expected top line growth, let's assume that number to be about 650 crores. But the EBITDA guidance of between 20 and 22% is a result of what? Is it that Monga and ME Energy are at slightly lower orders, or part of your core order book in the parent company you're seeing at lower margins? Because that will then lead, if I have 22% EBITDA margin, then the EBITDA has only 140 crores, which will not be a full 50% jump.
So,
So
Samir, if
just
I
wondering why the...
can I address that?
Sure.
See, we are in a project business. It is not possible for us to guide down to the nearest percentage. We have always maintained 20% plus EBITDA margin for last many quarters, and we have successfully achieved or beaten those estimates. In a project business, when you are executing jobs, you take a job on the basis of a certain estimate. When the execution happens, there can be variances, 1 or 2% here and there. Timeline execution also can change. When we are guiding 50%, you can say 50% means it's 670 crores or 675 crores or 720 crores. It's not possible for us to give you accurate numbers. There can be
I
times
get
when
that, Mr.
customers...
Khetan, I get that. I
Yeah.
just wanted to know, we have already delivered 24%. So in the full year, I'm not even looking at the quarter where it is 28%. In the full year, 24%, are you... so just wanted to know if it is conservative, that's great. Or are you seeing slightly lower profitability orders
So when you are
in your
looking
order
at
book?
when you look at the overall business, Monga Strayfield business is very profitable. So that's at about 24-25%. ME Energy is at around 15 to 17%. So blended margin for those businesses are around 20% odd. Kilburn is slightly higher, as we mentioned. So we are confident of between 20 to 22. Now, when we are giving a guidance, we are giving a guidance assuming future orders which will also come in the second half of the year. We don't know exactly at what margin that will come. So that's why we give a range. Now, the 22 can easily be 24, but it can also be 20. So that's why we are comfortable that as a management, we are looking at a 50% CAGR growth, both in top line and bottom line. Now, whether that 50 becomes 45 or 52, that's for investors to take a microscope and look at it. It's very difficult for management to be that accurate, especially for project business.
No, I understand. I just wanted to know whether there is any sort of orders that you are seeing which are lower margin. If you
We are
can't,
being conservative. As you mentioned, we prefer to be a little conservative. If we are able to do better, that's good for everyone.
right. And thanks for that. My second question is, are you obviously can't disclose anything that is still in the works, but are you looking at acquisitions currently, and do you foresee anything will likely happen in FY26?
So we've done 2 acquisitions in 2 years.
Sure.
We believe we'll deliver very strong growth organically. We want to consolidate this. We have raised capital, future capital, which will come in over the period of next 1 year. So we are not concerned about cash flow. When that happens, we are always open to opportunities. If we have done 2 transactions which are value accretive, acquisitions which have been reasonable and have added value to the organization. If something like that comes behind it, our thought process is to be open and to look at opportunities. Maybe something will happen by end of this year, some great opportunity comes. If not, also, we are very confident on strong growth. So we are not dependent on acquisition for growing the company. We are in discussion for technology tie-ups, and we are in advanced stage for that. So every strategy for growth does not have to be inorganic. There are technology tie-ups which we are looking at with companies in the US, in Europe, and in Japan, where once we do those tie-ups, it will open up some more opportunities for getting business. So rest assured, the management is working very hard to ensure that the momentum we have created, we will like to continue that.
Just a follow-up to that. No, I understand that it doesn't have to be an acquisition. My limited question was, are you in discussions today? Are there opportunities that you're already seeing which could culminate in an acquisition before the end of FY26?
So we are in discussions for some important technology tie-ups.
Right.
We
What
are
area would they be, Mr. Ketan?
In various drying solutions and heating solutions.
Okay, thanks.
Yeah, we'll always stick to our core business. Yeah. Before we move ahead, Vinay, there's a question directly to me on chat from Mr. Gopesh Sharma. I would like to take that.
Sure, sir.
What is restricting us to have order conversion rate of only 20-25%? Is it because of L1 criteria, or we skip low value orders, or any other factor forcing us to keep the conversion to 1/4? So, Gopesh, first of all, we don't operate on L1 basis. I would like to say that, and we have made it clear in the past, because we work with our customers very closely, so we are not always on the L1 basis. But if required, if we need to bag a job, we take a call whether we should follow this strategy. Because strategy depends on what orders we want to bag and how well loaded we are. What are the other factors? Well, there are many factors. How important the job is to us, how important the customer is to us, whether we have sufficient capacity to handle that. There are a number of factors, and that's where these strategies could change from quarter to quarter. I hope I've answered that question.
Thank you, sir. There's one more question in the chat. Yugal Kishore is asking, what's your timeline for NSE listing?
I don't think we can give any particular date for that. The board has approved it, that we are going to apply for the listing. Then it is up to NSE to see what is the process and the timeline. But we can't give a particular date.
Thank you, sir. We'll take the next question from Abhijit Mishra. Abhijit, you can unmute and go ahead, please.
Yeah, thanks for taking my question. I have a relatively simpler one. See, the orders that you have on a consolidated basis, which is close to 487 or 488 crores. What's the execution cycle broadly that you see on those orders?
As on date, I would say, all that should get executed within this financial year if there are no holdups. Typically for Kilburn, it is 7 to 11 months or 12 months. So I expect this complete portion to get executed and much more because we'll have orders in Q1. For Monga Strayfield, the order I would say the execution time is between 3 to 4 months most of the time. So that will get executed, and many orders coming in the first 3 quarters can get executed. For ME Energy, typical execution time depends, 4 to 6 months, sometimes 8 to 9 months if it is some site execution. So it's different for each of the companies. Whatever is the open order book today, that will definitely get executed.
I think Ranjit, the only one which might see some spillover is depending when the granule job gets
Granules
the
job, yeah.
floor.
But
Which
so for that we have a backup project also.
Yes.
So I made it very clear that granule project, even if that spills over, we have sufficient pipeline to take care of that miss.
And perhaps the Morocco project, that will also be a slightly longer duration, right?
No, well, we
that's
expect it to finish on time.
Okay, got it. Understood. And just to understand, to sort of maintain a 50% growth and follow it up with 25% growth. You know, I mean, if we have to name say a couple of sectors, because that's almost 1,400 crores of top line over the next incremental top line over the next 2 years. So if you have to sort of name, say, 1 or 2 sectors where you're most confident, which can sort of help you achieve this targeted growth rate, it will be great. Thanks.
Abhijit, it's not going to be 1 or 2 sectors. One of the biggest strengths Kilburn has that we are present in multiple sectors. So you can see now with nuclear coming in, obviously carbon black is a mainstay, fertilizers becoming important with our entry into OCP.
Right.
Then you have steel sector for ME energy, which is quite important. Chemical sectors there. So if you see our presentation, we are present in now multiple sectors, which actually adds to our confidence on being able to get the orders and execute and grow. And today, Monga Strayfield is bringing in the textile sector, which was earlier not there. So I think we have a very large spread of sectors, which cushions us from any slowdown. Like, for example, soda ash as a sector has been slow due to the dumping from China. So that's not affecting our growth today. But whenever that gets solved, you'll have big expansions coming in soda ash as well. So maybe that can come a year later.
And I would also request, Abhijit, that you refer to our presentations in the last 4 quarters. And if you refer to the pie chart, giving you the breakup of the sectors, you will find that it has been quite dynamic and changing. So at any point of time, a particular quarter, you would have seen one sector or one vertical contributing. But again, in the next quarter, we have something else coming up. So it's a very dynamic situation. But yes, carbon black, petrochemicals, fertilizers, nuclear, these will be definitely the major contributors. That's what we are seeing in the next 2 quarters.
Got it. Understood. That's very clear. And thanks. That's all from my side. Wish you all the best.
Thank you, Abhijit.
Thank you, Abhijit. We'll take a question from the chat. Mr. Kashyap is asking, what was the order inquiry pipeline in FY24? Like it is 3,000 crores in FY25. What has the growth been in inquiry pipeline?
It was 2,000 crores.
And now it's 3,000. So that's a 50% jump in the inquiry pipeline.
Thank you.
We'll
take the next question.
There's one more question on the chat. I think it's already been answered. There's a question directly to me, which says that when will the listing be done on NSE? I think this has been answered by Mr. Khetan.
Thank you, sir. We'll take the next question from Santosh Verma. Santosh, you can unmute and go ahead, please.
Sir, thank you so much for the opportunity. I have 2 questions. The first question is regarding the international piece, where what kind of exports we're looking into and what kind of growth we're looking into the export part, and what kind of percentage contribution we can expect in next 2 to 3 years from international exports.
So as mentioned in earlier calls, the global market for drying solutions is close to $2 to $3 billion. We are, as a company, looking at focusing on exports. we believe we should be aiming to do at least 20 to 30% of our revenue from the export space, which should be the target in the next 2 to 3 years.
Okay, sir. So exports, do we have any margin equation where we get better margin?
Theoretically, yes, but there are times when certain jobs in India also give very high margin.
Okay, okay. And in exports, it will take more number of days to execute because of the supply chain and all, or something like
That doesn't make a difference because execution will happen in India. Then there's only the dispatch and freight, and depending on which geography it is, that extra timeline gets added. But the manufacturing process is the same.
Okay. So this export growth which you're looking at, will it majorly come from Monga and ME, or Kilburn will also be part of it? Like
All,
major contribution.
it will be all three.
All three.
Okay, okay, sir. My last question is regarding the working capital and all. Are we expecting it to become better? For example, from 24 to 25, it went up from 131 to 194 days. In the future, we'll see better working capital and all?
So again, I think Mr. Sachin Vijayakar highlighted this, that it is not to do with becoming better or worse. It is the nature of the business that there are certain months where there's heavy dispatches which are taking place. And because of that, you'll only see the balance sheet on 2 dates, 30th September and 30th March. So that's why these changes happen. Plus, close to 25 crores has come in as ICD from the subsidiary, which is the money we paid the shareholders of Monga's Trade. So that also has impacted this. Sachin, if you can add.
Yeah, because once we start executing the long delivery projects, and if we start taking more advances from the customers also, which we are trying, so then we will be able to maintain this working capital cycle of lesser number of days. And better credit terms from our vendors also. So that will help us in reducing this larger working capital days.
Understood, sir. Thank you so much for your time, and thank you for answering the question, sir. Thank you.
Thank you, Santosh.
Thank you, Santosh. We'll take the next question from Mr. Naman Bansali. Naman, you can go ahead, please.
Hi, sir. Thank you for the opportunity and a great set of numbers. My question is on the business wherein uh, we have been opening our business towards multiple new sectors, and one of them was cement, second is pharma with granules. So once the initial ordering of these two companies, maybe from Shri and Granules, complete, what sort of opportunity does that open up for us into these two sectors, and what sort of capability have we built in by delivering to these initial projects with the two companies?
So for the cement, I would say the market size would be around 4 to 5,000 crores. So let's see how much of it, how much of that pie we can get. That's one. And as far as the execution skills are concerned, we very much had those skills in heavy energy. It was some other reasons why those large orders could not be backed. So once we have completed, we have a good reference. I'm sure we'll have more opportunities. And the fact is that we have given a very customized solution to Shri Cements. So I'm sure we'll have, a good reference for the future. What was the other question? Can you kindly repeat
On
it
the
for me?
pharmaceutical side.
On the pharma, yeah. So again, granules, as I mentioned, this was kind of a pilot order for us for the API. And we also have to keep in mind that our end customer has to be successful in their trials. Once that is done, there will be more inquiries coming in.
Got it. Got it. Thank you. Second question is for Mr. Sachin. What is the capex guidance for this year or maybe the next 2, 3 years?
This year,
Sachin, I would like to answer.
Yeah,
So as of now, I can tell you that we are targeting somewhere around 25 crores, but that is very fluid as of now. Okay, we haven't taken a call. Probably we'll need one more quarter to decide that. And that's why I have not made any reference to capex in this quarter.
Got it. Got it. Thank you. That's it.
Thank you. We'll take the next question from Tejas Thakkar. Tejas, you can go ahead, please.
Thank you for the opportunity. Sir, I have two questions. First is the current, we have 5.09 outstanding shares, 5.09 crore outstanding shares. Are we looking at further dilution? And if not, is there any ESOPs or anything that is given out? And what is the likely number that we're going to end up in FY26? So that will affect the EPS at the end of the day.
The current shareholding is 4.75 crore shares, not 5.09. I think what you're referring to are some outstanding warrants which are there. So all that will get converted by June, July of FY26. So you'll be raising a further 200 crores into the company, which is already committed in the warrants. And that will get all completed by Sachin, June 26 or July 26, something like that.
June 26. 18 months from all issue. Yeah. So total capital will be 562 after conversion of entire conversion.
5.62, is it, sir?
Right.
Yes, but that will be in FY27.
27.
Okay. So second question is, I'm just circling back to the order book. So if I understand correctly, 487 is the current number. And what I gather from your previous call and in this call, we need about roughly 200 CR by end of May, so that we can achieve the lower band of 650 crore for next year. So,
Right.
so as of April and as of May, and if you can share for this
No,
year.
it doesn't work like that in terms of calculation. You see, when we are guiding for 50% CAGR growth, we are looking at Monga Strayfield achieving 100 crores. Now, that 100 crores, those orders don't come in the beginning of the year. That comes through the year. The tea business, the tea dryer business also comes. It's a very quick execution for the company. That also comes,
In October,
in the
November.
period of October to March, say between October to December, and gets executed by March. So you don't need 200 crores by June to achieve the numbers which we've spoken. Also, whatever orders we get in the third quarter, up to third quarter, some part of that comes into execution. Like, for example, we got the Morocco order in September. That's already come into execution. So I don't think it will work like the way you are calculating it.
No, so my calculation was based on the inputs that roughly it takes about 7 to 11 months is the average. So I'm just going by the average.
But we do unbilled revenue. It's work in progress also, which comes into our top line.
Percentage completion is also done. So not necessarily entire equipment has to be dispatched.
Yeah.
So
So
the
is it?
extended.
So
Yeah.
can you share what is the additional order for April, May? Is it possible to share that confirm orders?
Well, I
apart from-
think we should hold on right now. Sachin,
We've disclosed, Ranjit, I think few days ago only about 30 crores of orders.
30 crores of orders we have disclosed. That is only on Kilburn we have disclosed.
That's the Kilburn we have disclosed. Yeah.
Okay, sir.
So as and when any large orders come, the company discloses it.
Yeah. Got it, sir. Thank you.
Thanks, Tejas. We'll take the next question from Priyanka. Priyanka, you can go ahead.
Sir, we are entering a nuclear power segment. So, how much order books in pipeline from nuclear power segment?
We have 50 crores today, which is there. We believe this will be an important segment in the next 4-5 years, where every year some order should come through.
Priyanka, you're on mute. Are you done?
Yes, sir.
Yeah. I think that is the last question for the day. Would the management like to give any closing comments?
You can just check if there are any questions pending in the chat box.
No, sir.
Okay, fine. Mr. Khetan, would you like to say
Hey,
something?
Ranjit, you can do the closing.
Yeah. No, I think, we are well on track, and we have been getting very good inquiries, some good orders. And as I've mentioned, we do see a 50% growth on the current year. And in the past also, we have mentioned that we will try to optimize the margins, and we will keep guiding you from time to time as they improve or if there's any setback or something. So I think we are, we have been very, very open on how the situation is. So we'll keep you posted. Thank you. Thank you for your time.
Awesome. Thank you. Thank you to all the participants for joining on the call, and thank you to the management team.
Thank you.
That brings us to the end of today's call. Thank you.